Thank you, President, and thank you indeed, Ms Nouy, for your remarks on a very difficult day for those of us in Brussels. On a previous occasion when you attended this committee, I asked you about the Irish Central Bank's decision to introduce stricter macroprudential rules on mortgage lending, as you might recall. At the moment in Ireland we have a situation where housing supply is very short and rents are increasingly dramatic. However, house prices are stabilising and even coming down in many regions. My question is whether the central bank should have flexibility with such measures, such as the measures which would tighten if, say, house prices exceeding a certain level, but that might loosen where house prices to be particularly low. In other words, should the measures of national central banks be counter-cyclical in much the same way as other policy areas, such as in monetary and fiscal policy? And my second question is, I'd like to know whether you believe housing supply should be used as an indicator for macroprudential policy. Such macroprudential rules on credit tightening, for example, when there is oversupply of housing, and then should be loosened when there is an undersupply. Essentially, should central banks be able to adopt their monetary policy flexible to market conditions? And my final question, President, and it's this. What are the dangers, from your perspective, or the risks that you envisage for the financial sector if Brexit were to occur? There has been speculation that some firms from the City of London might relocate their front offices to other jurisdictions if the UK were to leave the EU. I think it's important to examine what the potential liabilities might be if one of these institutions were to experience, say, a solvency issue. Who would be on the hook for this, as it were? Would it be for the member state, or would the liability be an issue for the SSM itself? And has your organisation, has the SSM, actually completed an assessment of the risks concerning Brexit? Thank you.
Regarding the measures taken by the Irish Central Bank, macro-prudential measures, as I told you the previous time, I think they were very useful, and it's very useful to address possible mortgage risk or real estate crisis through such macro-prudential measures. It's a decision of the national supervisor that I fully respect. The ECB could top up those measures and could, if it thought that it was needed and nothing was done, take initiative. But this is an exceptional situation. It's largely in the hands of the national supervisors and central bank. Which is quite wise in my view, because we have 19 different ways of delivering mortgages and respond to the mortgage needs of the European citizens. This is the first thing I asked my colleagues to produce when we took over, what we called an ID card about the mortgages of the different countries to fully understand the situation and the characteristic. And as a matter of fact, we will be publishing something on the different kinds of mortgages in the euro area soon, maybe even this week, probably this week, before the end of the week. Should the housing supply taken into account for macro-prudential policy? Well, for sure, because lack of supply or large supply are criteria that interfere with the level of prices and the situation of the market. So they are taken into account. I will not respond whether they should, on the question whether they should be taken into account for monetary policy, because I don't know anything about monetary policy. I've never been in charge of monetary policy in my career, and we operate under a strict separation in the ECB between the monetary policy part and the supervisory part. Regarding the banks that well, regarding the Brexit, I will neither try to predict the outcome of the referendum, not to try to quantify the impact of UK exit. But your question is different because it addresses the situation of banks that could join continental Europe. I don't know whether it will happen, and I will not comment hypothetical situations, but everything is already fixed by the European regulation. We might have banks that will be significant institutions in this case, and probably we will have more significant institutions in the euro area, will require more resources for sure in the ECB. I see also advantages to have more jobs created in continental Europe, but, well, again, I will not comment on hypothetical situation.